welcome back to Finance with Sherry. Thank you so much for coming back to check out my next video, and we finally crossed over to the next part of our series, which is wealth creation and investments. So investments is usually seen as the huge elephant in the room, and the best way to eat an elephant is piece by piece, and that's exactly what we'll be doing. So a quick reminder: this video does not constitute as financial advice. I am not a financial advisor. And if you do seek financial advice, please do speak to a registered financial advisor. And if you do not have one and you want one, my details are in the description box and I can hook you up with a really well experienced advisor. It is really important to have a realistic view or realistic expectations when it comes to investing. So if you invest 500 Rand per month for 12 months, you cannot expect 500,000 Rand at the end of a year, or 1 year. I mean, that is really unrealistic. Definitely miracles do happen, but it's kind of unrealistic. So for today's videos, we are going to start at grassroots. We are going to look at risk profiles and the importance thereof. Investopedia explains risk profiles as an evaluation of an individual's willingness and ability to take on risk. I like to think of it as how much I am willing to lose in order to attain my financial goals. Okay, how much risk am I willing to accept or stomach to achieve my financial goals? It is important to know which risk profile you fit into, as it helps guide both yourself and your advisor into which asset classes your money should be put into and how much of each asset class to actually compile your entire portfolio. So this is not a one shoe or one size fits all kind of approach. As our needs change, so does our investment goals, and our profiles might also change as life changes. So there are three main risk profiles, and they have sub profiles between them as well. But for this video, we'll be going through the three main: conservative, moderate, and aggressive. Conservative investors' main focus is protecting and preserving their capital amount. They are willing to take on a lower reward for lower risk. They cannot stomach too much risk because they want to preserve their capital. They want stability from their money. Then you get the moderate investor. I like to think of this as the middleman kind of investor. They are willing to take on more risk than your conservative investor, but they also a bit cautious when it comes to risk, but they do want high growth as well. They like a balanced approach in the market. So it's a balanced risk approach for a balanced kind of reward approach. Then you get your aggressive investors. These are your high risk, high reward kind of investors. They want maximum return from their money and they can stomach high potential losses in the market. So you might be wondering, which profile do I fit in and how will I ever actually know which profile I fit into? Do not fret. I've put a questionnaire or a sample questionnaire in the description box, so check that out afterwards. But there are tons of questionnaires online to actually help guide you into making this decision. So the questionnaires would ask you the following questions. Firstly, what is your financial goal for this current investment? Okay, so you can have multiple financial goals and multiple kinds of investments. Remember, retirement is also an investment. So what is your financial goal, firstly? And then, how old are you now? Okay, and then what is your time horizon? So is this an investment that you plan on keeping for the next 10, 20 years? Or are you looking to cash this in the next 5 years when you want to go on your Italian holiday? What is your time horizon for this investment? And they give you, it's a multiple choice, so they give you options of what to choose. And then also, do you have an emergency fund or backup money in case life happens? So let's say, for example, you get retrenched. Are you going to cash in this investment because you don't have any other uh, money anywhere else? Or if your car breaks in year 2 of your investment and this is a 10-year investment, are you going to cash this investment in because you don't have money to fix the car? Do you have spare money set aside? So that's one of the questions. Next question is, how do you react to different swings in the market, in the economy? Remember, the market is never just linear, a lovely straight line where good things happen. No, there are dips, there are rises. So a lot can happen. What kind of person are you? When things go bad or look a bit bad, are you going to run to cash in the investment to put it somewhere else? Or are you going to stick it out and hope for a brighter future? Okay? And then, what is your future income or expenses? Is also a question. Um, for an example, are you kind of engaged and planning on having a family soon? Will this investment be used for your child's education? What expenses will you have in the future that might impact this investment as well? So you will notice that as your financial goals change and life changes, so will your risk profile. And that is completely normal. Don't worry about that at all. So as previously mentioned, I have left a example of a risk questionnaire, a risk profile questionnaire in the description box. Check it out. And when completing it, be completely honest with yourself. And it is just a guide to help you better invest your money. It is not set in stone, so you may disagree with it. And if you want, you could also call up your advisor and ask them to furnish you with a risk profile questionnaire from your current investment company. And that they should be able to give you in no time. So don't forget, hit like, hit subscribe, please, and share this video with everyone you know. Till next time, thank you.